and converging now as we approach the last 40 minutes of trade. Amit Gupta is with us, Senior Vice President and Fund Manager at ICICI Securities. Amit, good to have you with us here. Thank you very much for your time. For viewers who are watching and, watching programming around all-time highs and 19,000 levels, and, tomorrow morning newspapers will have the headline, not just pink papers. What should be the mindset for investors? That this is the beginning of a larger move higher, or one needs to be a little more measured, a little more watchful, don't take the eyes off the ball. Let's just begin there.
So my sense is, at least for a couple of months, this kind of, exuberance is likely to continue. So why I'm saying this? Because if you look at the global markets, because they also, supposed to be, they should also be stable in case the emerging markets needs to keep on outperforming. So if you look at S&P numbers, so this quarter, the quarter 3, July, August, September, so we believe there is an expectation of the revival in the earnings over there. And that is where for July and August, I think the market should remain fine. And if there is some disappointment, that will be out actually after September. So in that case, afterwards we can see some sluggishness. So that is one point. Second, I think definitely some macro tailwinds are in favor of India right now. Our current account deficit, which was very scary towards the last quarter of the last calendar year, now it looks much in control because of the lower crude prices. So it is expected for financial year 24, it may be 1.9%. That means below 2% also. And I think that is why the currency also can remain stable. The FI flows, can continue, which we are seeing for the last 2-3 months. I think, and that is where, if you look at the earnings in Indian markets now, so last quarter 4 financial year 23, we have seen one of the best quarter in the last 2 years. And this has happened because the commodity prices are down. And in that case, I think if it remains low, the coming 1 or 2 quarters again, you will see that kind of margin expansion continuing. And that is not the only surprise. I was surprised to see the sales growth also in the last quarter. And I think that is where more stock specific kind of move, more stocks coming up in the mid cap space. Also, you are seeing good participation coming up, and it's a good sign for at least few months now.
Hi, Amit. Good afternoon. Nigel on this side. Amit, let's get to the stocks then. What have you all been buying? I mean, give us a couple of stocks where you all have increased the allocation, or where you all have decreased as well allocation, say, in the last couple of months or so.
So, yes, so very stock specific. We need to have mid caps in the portfolio. That is where you can create alpha. That is very clear. And there are a few segments like industrials, like housing related segments, where you need to, increase your portion. And also some of the stocks from the power space. I think these are the sectors where we are looking more, and we are adding positions, particularly from the mid-cap space now.
Okay, so looking at some select mid-caps, just want to get your thoughts on the defense space as well. Because, Amit, what we've seen is this humongous rally play out. So it's but natural that people start getting a little worried whether you should still look at stocks like HAL or a Mazgaon Dock or a Garden Reach. No one's denying the underlying sort of positivity or the opportunity, long-term opportunity. But just in the near term, how should one look at defense?
So I think the sector is definitely very good, because whatever the government was expecting to have in exports 13,000 crore, it has clocked in almost 16,000 crore, and going forward they are expecting 35,000 crore of exports. And if you look at the Southeast Asian countries also, so India is increasing the exports over there, and they have started getting some technical guidance actually from the developed nations. So overall, India, from the pricing point in the defense space, it is at a sweet spot, and they are going to take benefit out of this. But when I look at the valuations now, I think it is a little stressed, particularly in this segment. I think almost more than 40% of move we have seen in a single month in these stocks. And that is where I think if you are not leaving this space, at least you need to have your more research required now. And that is where I think some private players, for example, Bharat Forge may be the one, which still I feel a lot of juice is left. Looking at the current setup, because after the recent last quarterly results, we saw the stock had declined. It declined because it was a little lower than the market estimate. But now I think it has spent enough time near 760 or 800 levels, and it has started moving up. Last time it was near 900, so almost 150 points of decline, and now I think it is gearing up. It is gearing up because it is more in defense. It has done really well over there. the artillery guns and the armory, what they are talking about. Next, I think in the auto ancillary, forging is really picking up very nicely now. So whatever auto ancillary themes we are looking at, forging is one of them. And that is where I think this company is going to benefit from both the fronts. And a long time we have seen it has been consolidating around 600 or 800 kind of levels for the last many years. I think the time has come possibly now it to outperform, and that is where I think the canvas is placed now. Once you have already seen some other stocks in defense already participating, I think it may be the next contender now in this space.
Forging space, got that. Amit, what's the expectation from Q1 earnings in terms of revenues and margins? And is there a possibility that, the earnings performance may not be as high as what the street is anticipating? We could have some downgrades, which spoils the party. Take us through the nitty-gritties of what the street is expecting in the Q1 earnings picture.
So I think the street has started expecting at least the margins should be better. And that is where actually the EPS growth of some kind of increase we have already started seeing. It is not a very significant increase yet. So 2 to 5% of increase we are seeing actually in the EPS now for the coming 1 or 2 quarters. And that this is where actually number of stocks, if not nifty, but if you look at, for example, from the power space, we have seen the companies from the distribution space now are really picking up. The companies which are increasing their capacity in renewables. So for example, look at Torrent Power. So this company, there is a very clear EPS upgrade that we have seen now in the recent period. It is expanding its renewable capacity now substantially. We believe that another 20% of jump is very much likely now. And on the top of it, if you look at the distribution, so in whatever circles they are, for example, in Gujarat, in some parts of Maharashtra, in Agra, UP, in Daman, Diu, so we have seen everywhere there is a good surge in demand. And this is where this company is going to benefit when the gas prices are low, because it gets gas for the power plants also. And when the gas prices are low, it gets a good fair price for that. And I think this is where overall earnings are looking to kick it now much better. And the stock possibly may be moving towards 750 or plus kind of levels. So we have taken in our more consulting portfolios now for the clients.
Amit, by the way, have you ever owned Indigo? Do you have any views on Interglobe? I mean, the stocks, the companies hit 1 lakh crore market cap. It's up 5% this week, 10% this month, and some 40% from the March closing levels when the market rally started. I was reading a IIFL note. They are expecting 50% upgrade to full year consensus earnings after first quarter numbers. Any thoughts at all?
So my sense is the stock is going beyond 3,000 possibly now in the coming quarters. Why I'm saying this? Because definitely there, as you said, there is a good tailwind now. The crude prices are down, which contributes to more than 50% of the airline business. The passengers moving around, whether it is the international passengers or it is the domestic passengers, that is definitely picking up now. And this is where you have very limited players now in this particular industry. It is same like what you have in telecom. And the same thing is happening in airline now. If you look at Tata's and Indigo, they hold more than 85% of market share. And this is where everyone is ordering record high actually numbers for the fleets. And I think this is the direct benefit to the company. The only thing is the promoters, sometimes they want to exit from the company at higher levels. That can create some kind of volatility. But overall, the kind of passenger surge we have seen, it is just close to the pre-pandemic now. So whatever decline had come, it is already cover up. And now you are seeing more corporates moving out. They are moving out actually for expansion in the business, meeting the clients and the international passengers, and then the medical tourism. So everything is starting now in India. And I think this is where this is a direct beneficiary of that, especially when the crude prices are lower.
Okay, all right, Amit, thanks a lot for joining in. Well, it's been a dream run, right? Last few years from 40% or market share going to over 60%. Everything going well for them, right? One player stepping out of the way, crude prices cooling off, and the unlocked trade playing off pretty well in their favor. Thanks so much, Amit, for joining in. But it's that part of the day when we want to know what's going on.